When it comes to investing in startups, most venture capitalists are cutting back. That's according to a survey from Deloitte Touche Tohmatsu and the National Venture Capital Association. Tighter credit and IPO markets have really made it harder to raise money, and venture investments may be down by almost half from a year ago. For more on why it's so tough out there, we turn to Tim Mullaney, who wrote the story for Bloomberg. Good afternoon.
Hey, Carol.
It is really tough. How tough is it?
Well, it has been very tough. In the first quarter, investments are down 61%. And in this survey that came out yesterday, half of venture capitalists, 51%, said that they are cutting back both the number of companies they invest in and the total dollars that they invest.
So we got this little chart up for everybody. So that 51% says what? That they're cutting back?
Yeah, that's correct. And as you can see, only 13% are increasing. So, so it is a rough time. The interesting thing was they went on the conference call as they were disclosing this data, and they say really out of nowhere, because it's not anywhere in the data, and they admit it, that they think things will start to rebound by the end of the year, and they could be back to, like late 07 levels by the end of the year.
Does that make sense? It sounds like two stories there.
Yeah, well, we did.
Or multiple.
We did have some trouble reconciling that on deadline. Basically, it's a very small industry, and the National Venture Capital Association tends to stay right on top of its members. So what they're telling us privately is that they, based on informal conversations in the month or so since they filled out, everybody filled out these questionnaires, they think they're starting to see a turn. It's very. And
that's why you say that 53% say it's a good time to invest in that chart.
Yeah, but one caveat: venture capitalists are who they are. They're about betting on the future. They're optimistic by nature. It's like a realtor. It's always a good time to buy a house. For these guys, it's always a good time to invest. And Mark Heason, the president,
because they want to invest. I mean, that's what they do.
Yeah, right. I mean,
make money for their investors.
Watch what we do, not what we say. We sat here, and one of my favorite venture capital stories. It is about in 2002, when everyone was telling me, "Oh yeah, we're doing deals just like always." There's a legend, and it's a true legend about a limited partner in a venture fund who confronted a very well-known venture capitalist with the U.S. Golf Association records of how many rounds of golf he had played the year before, because he wasn't doing anything.
Well, I got to tell you, I just came back from the West Coast and actually sat on the plane with somebody who was very big in venture capital several years ago and still very locked into the community. And he said a lot of people are sitting on the sidelines. They're just waiting. Yeah,
I mean, it's funny. I was out there, in April, and I was talking to a guy named Jay Hogue, who runs Technology Crossover Ventures. Jay raised $3 billion 2 years ago. Now, why would you know Jay Hogue? Well, he helped Expedia get where it is. He was an early investor in Netflix.
Right.
If you buy your movie tickets from Fandango, that was Jay Hogue Company.
Right.
He has invested a whopping 5% of this fund. He is waiting for prices to fall.
Okay, he's waiting. Okay. What about the IPO market? I mean, how does that really affect venture investment?
Well, the thing is, venture capitalists put money in the expectation they'll be able to get money out.
Right.
And the way they get money out is primarily through IPOs. They either sell companies to you and me through IPOs, or
and we know there's not a lot of IPOs.
Right. And there's only been 4 startup IPOs this year, which is not only blocking one road, but it's also when they try to sell a company to Intel or to Google. Intel and Google are looking at them and saying, very nice, we'll pay you 50 cents.
Hey, Tim, where there are things going on, isn't it kind of in the green area? There's so much talk about that.
Yeah, that's the hoped-for salvation.
Yeah.
And the NVCA was on the call yesterday saying, look,
who's that?
The National Venture Capital Association. Sorry, my jargon watch. And Mark Heason, the president, was saying, look, we think that the venture industry is much more diversified than it used to be. It's not all information technology now. We also have clean tech. We have medical devices, whatnot. Problem with the theory is that the biggest declines in the first quarter were in clean tech.
So go figure.
Right. And there's really 2 beasts in clean tech. There's the big capital-intensive guys who want to build factories to build solar panels or to make cellulosic ethanol out of wood chips or something like that. And those guys often need $100, $200 million at a time, and they are really stuck. So what the venture guys are looking for is all these $4 million, $8 million deals to sell software, companies that make software for smart electricity meters, that sort of thing.
Right.
And they're hoping to get it out in nickels and dimes.
We just got about 30 seconds left. There are some pretty big deals out there, and I think we've got a little bit of a graphic to kind of walk through them. We'll bring it up, and you can talk to us about that.
Yeah, with the VCs saying that they think that the numbers will recover by the end of the year, you're sitting there and you're saying, well, we don't see it in the data, but we do see some anecdotes recently. Solazyme, very interesting company. They're talking about making fuels out of algae. I have no idea how that works.
I've read about that.
Yeah, but they put in $57 million, which is a lot.
Got 20 seconds.
Right, exactly. Exact Target is sort of the yin and yang of this. Exact Target raised $70 million in venture capital. They are an ad targeting firm for the internet.
Okay, so there's some stuff going on.
But the problem is that the reason they did the $70 million in venture fund was because they couldn't sell their $75 million IPO. So that was their third choice. And so that's the rock and the hard place that they're between.
That tells the story really clearly. Hey, Tim, thank you so much.
Okay, thanks for having me.
Our own Tim Mullaney. Check out that story on the Bloomberg.